I didn't want to be something other than a CRNA for a while. Nothing that generates a lot of revenue is going to be easy. It's as if they listen to this podcast and are like, "Oh, Josh is not going to be around for that long. Let's beat him to it." The real estate is an amazing equity game. Cash flows, it's lagging. I don't want to say it's not there. It's just lagging, and it'll catch up to us. That's one of the beauties of mobile home parks, also, because if you want to sell your home, you pay rent until it's sold, and then the new person pays the lot rent. Today we have a round table. More of a square table, I guess, if you're being honest. It was just me and Colin today. But we're doing another episode of the Investing RN podcast. A little chit chat today with me and Colin. We're going to discuss a few things. A couple of us have had job situation changes recently. We're going to touch on that. We might sell another one of our properties. We're going to talk about why. We're going to talk nothing about the election coming up because we don't want to get banned.
And we don't know anything else.
And really, neither one of us are very political. Just give me my money and as much as possible.
Yeah. Now you know who we're voting for.
We spilled the beans. And then, should you have family members sign an official lease? Me and Colin disagree, and we're gonna debate about that.
But I'm right, so.
And then I'm sure we'll go off on tangents and then probably forget to talk about 3 of those things.
I was gonna say, do we have any of the questions that we were supposed to answer like 16 episodes ago?
One of them was why mobile home parks, and I feel like we've touched on that, but I guess we can go on about that today a little bit towards the end.
I'll tell you why, because they're glamorous.
Are the headaches? So we originally started because the headaches were less. Are they actually as less as you thought they were going to be? As the person who does all of the asset management?
They are definitely. So sometimes I think to myself, I'm like, oh man, these are not as headache free as I thought they would be. But then,
is that just because we have 150 of them though?
That's what I was gonna say. It's because, well, technically, like occupied, we have like 135-ish, I think. But if we had 135, we have 150 lots, but actual, occupied units, it's right around 135 or so. It's an ever evolving situation as tenants come and go, and also, so we're getting our one property back from the third party property management. We're officially taking over as of tomorrow. And I don't know if I missed it in one of their communications, but it's a 19 lot park and they have 17 people paying rent right now. So we've been trying to get a hold of them to get clarification on what's going on and who left or what happened. And then they're saying something about somebody selling, but then I don't know what that means because they should still be paying lot rent. So
that's one of the beauties of mobile home parks also, because if you want to sell your home, you pay rent until it's sold and then the new person pays the lot rent. So you don't really have a lot of turnover as far as like empty lots not paying unless they actually take their home away, which is rare.
You shouldn't. But then this property management company we're dealing with has not been great. And, I definitely think that property management can be a good way to, like, hiring third-party property management can be a good way to make this a truly passive investment. However, if you get a bad company, which I can't fully say they're a bad company, then it ends
and they're pretty upfront. They were upfront with us. Like this was their first mobile home park ever.
First and last.
Probably. But it was their first ever. So they were upfront like, oh yeah, we don't do these.
So that's why I don't know the exact number, but it's right around 135. But that being said, if we had 135 apartment units, the headaches, or even if we own the mobile homes in our parks and we were renting them out, the amount of headaches would be at least like 3 or 4 times what we're dealing with now, since they're mostly tenant owned homes. So, and then a lot of the stuff we're dealing with right now is more to do with some of our newer acquisitions, which were less stabilized parks than the first 3 we bought. So it's all in all, it is great.
Which, I mean, ends up being good because we the first 3 we got were pretty well stabilized. It was just transitioning onto the online portal.
I mean, there were room for rent raises. There's a couple empty pads in each park. So there's some infill opportunity and some value add opportunity. But these new ones we got are performing like way below their potential. So there's a lot more, I don't want to say potential again, but there is a lot more potential for, adding value and bringing up the value of the parks there. So I feel like I just said a lot of words twice, but
I've never
That's
done
it.
that. I've never done that.
You've never repeated exactly what a guest said right back to
If
them
you
as your own quote.
if you're a weekly listener, it was only like 2 or 3 weeks ago. I literally said verbatim what the guest had just just said like 30 seconds before, but at least I caught
And
myself and corrected
but not like mirroring as your own thought.
it.
You were you weren't just like, "Oh, yeah," like, "Oh," no, you were just like, Here's my new thought." What you
Oh
just said.
man, I
Yeah.
can laugh at myself, so that's why I'm not depressed. These new parks have a lot of empty lots, so that's where most of the work is going to come from in the next few years, trying to increase occupancy, and that's something that we're figuring out on the parks that we've owned longer. And that's actually that's the biggest reason why we're actually raising some capital right now, and we're paying investors 10%. We're signing a one year term, so if you're listening and you have some extra funds sitting around, we can give you 10% on those funds. So just, yeah, DM us on Instagram. How do you like that for a plug?
Ooh, $1,000,000 minimum to invest, so, you just, no, it's
million
only
dollar
like
million pesos.
yeah, 1,000,000 pesos would actually probably be about right. I don't know what the exchange rate is now, but anyways, $10,000
I
minimum.
need, I need to find this out while you're.
Yeah. Well, no, then it would be 100,000. Last time I checked, well, I don't know, by last time, when I was in Mexico 14 years ago.
So it's
Actually, that
probably
was 18.
all right. 1 peso is 5 cents.
No, you wanna know oh, so yeah, 20.
I can't do
So
quick math. So
so it'd
let's
be
see what 1 million pesos is. $50,000. Right on, actually.
no, 200,000 pesos, so $10,000 American dollar minimum.
Oh, that's right. That's right. Yeah.
Yeah. Anyways,
But I mean, so we're saying that, but really, there's not a minimum. You can
yeah,
bring in $100.
we just want new
But
friends.
we can we can move on from that topic. You guys get the point.
Yeah. So this is why we had to do bullet points. And bullet point number 1, job situations. So Josh called me middle of last week, not crying,
I was
but
not. I was a man.
yeah, he sounded like he had been crying.
Exactly. I wait till I'm done and then I call you.
Yeah, because I will ridicule you. But yeah, what happened, Joshua?
When we record our episode on January 26th, I'm gonna go pretty hard on the situation, but as of now, I'm gonna use like soft gloves, like soft kid gloves. So as of now, I'm gonna be in pursuit of new job security.
That whole
I,
loyalty doesn't pay off is
I
absolutely correct.
absolutely correct. And it's as if they listen to this podcast and are like, "Oh, Josh is not going to be around for that long. Let's jump. Let's beat him to it." But they obviously don't do that. So, anyway, yeah, my contract was terminated. I had a 120-day out, so they gave me my notice last week. And so, as you might imagine, last week was not the chillest of weeks. I had some thoughts going on in my head, figuring out what to do, and luckily, I've been preaching that loyalty doesn't pay, and I like to have option 2 and option 3 kind of ready on the standby, and I've had that and made a few phone calls and filled up my schedule. I have a lot of options. Now I just got to choose which one. None of them are as good as the one I had, so I am pretty disappointed in that. But I have some other options. I'll be driving a little bit more, so I'll be able to listen to the Investing RN podcast more regularly on Tuesday mornings. How many plugs can I fit into one episode? But I guess if you're already listening to this, then you're aware of us.
Yeah.
Um, but so like I mean, the CRNA job market is it's very strong. Like, so this door is closing, but there's a lot of other doors that are opening. And I will not like, I'll actually be making a little bit more money, and it's not about the money. I'm in a place in life where I want to be home more, home with the family, and that is gonna actually decrease a little bit because I'll be driving and I'll be away from home a little bit more. But it is what it is.
So also, I think another thing here is like your work environment preference, because
Oh, 100%. Yeah,
if
that is
you
it.
were okay working at a bigger hospital with, if you can't see it, if you're not watching on YouTube, I'm doing air quotes, with physician anesthesiologists, you could probably get a job locally, right? I mean, and then what? You'd be
Every big hospital around me is hiring. And I like working independently. I don't like people telling me what to do in the middle of me doing that exact task. That's what bothers me the most. But basically, I get paid a lot more independent practice, so that's like a bonus. So why would I want to work in a team environment when I can make more money and enjoy my work more? I guess the downside is now driving more, being away from my family more. I can rationalize it in my head, like, oh, I'll make more money this way, so I can take more time off to be with the family. But really, it's just going to be me driving a little bit more, being away from
Yeah.
home a little bit more.
But then also with some of these assignments, you have less call, so that might translate to more time with the family. And then if you're doing call at a bigger hospital, I'm sure you actually get called in a lot more than you do at these smaller hospitals.
Oh, 100%. Yeah, I was actually just on call this last weekend, and I got one call Friday night, and I didn't do anything else the rest of the weekend. But if I'm on call at a bigger ACT, whatever, 100-bed hospital, and that's not even a bigger hospital, that's just a regular size hospital, I would be working every day at some point.
So a lot of factors to consider, but it is good to have the options. And I mean, I think it's a testament to the whole like what we're doing outside of nursing, because obviously you're not in a place right now where you can just walk away from a job, especially a job that pays as much as yours does there in Wisconsin. But at least we're building something so that, because you're what? You're 32 now, 33?
Too.
32. So 32, you still have the flexibility and
I
like the energy to do this long drives and stuff like that. But can you imagine like being 50, 55, 60 years old and something like this happens and you have no other options, and it's just like hitting the same scenario in 20 or 30 years would be completely different than it is now.
Yeah, I would just work in one of these big hospitals in the ACT and just deal with it and just be less fulfilled, I
Happy.
guess. Yeah. Yeah. And then
Just be
just hate
miserable.
my life.
Yeah. But I mean it is. It's like, it puts you in this different position. So
Mhm.
that's what we're trying to build, and that's kind of what motivates us for
But
that. So
I've started so for a while when we first started real estate investing, I don't know why, but I don't want to say I was embarrassed of it, but I just didn't like talking about it at work. I think part of it was because I spent so many years of my life trying to become a CRNA. I didn't want to be something other than a CRNA for a while. But I would say probably a year, maybe a little more than a year ago, actually probably a year and a half, because it was before we started the podcast. I started being more okay talking about it at work, and now everybody knows what we do. And basically, ever since this happened last week, I've had people asking me all the time, like, "Oh, are you going to just do full time real estate investing now?" And the answer is, I would love to, but but I
but
can't.
we got to
But
buy more stuff.
I got expenses. That real estate, the real estate is an amazing equity game. Cash flows, it's lagging. So I don't want to say it's not there. It's just lagging, and it'll catch up to us. We'll see where that is in a few years.
Yeah, well, and this and we realized that we were not playing this for the short term gains. Like we weren't doing things to get out. We, our intention initially, I think, was to replace our income as soon as possible and get out of nursing. But then the moves we were making were opposite of what we were trying to achieve. And I don't know, maybe that was just a little bit of ignorance on our part, but I think
Probably.
we well, and I think we realized the way we were doing things in our real estate investing was not necessarily wrong, but it was just opposite of what we were trying to achieve. And so we all kind of took a step back and realized that, and now we've course corrected. And it's like, okay, it's not that we're not doing things right or doing things well. It's just like this is going to be a great thing down the road, and as long as we don't need it right now, that's fine. So
And we've talked about it all the time. We definitely got sucked into the trap of seeing some people on Instagram like, oh yeah, I'm making so much money and I've only done this a few months. And we're just, yeah, we thought it would be easy. It's not. Nothing that generates a lot of revenue is going to be easy.
well, again, like back to what I was saying, we could, I mean, not that the parks we were buying were primarily park owned homes and we just sold them all to tenants, but in a different model, we could own the majority of the homes in our parks, and we could get pretty close to replacing our incomes and, just relying strictly on our real estate. But at that point, it would be trading nursing shifts for just hours and hours of property management and headaches and all that kind of stuff. And I
Mhm.
think, especially with, I mean, even with you having to change your jobs, I think we're still in a position where our nursing jobs are better than dealing with that. So
And we've used bank funding for every property we bought. Correct me if I'm wrong, except for this new one in Nebraska, right?
yeah, and then like
And
the duplex we bought
oh, that's
cash.
right. That's right. Okay. So basically every single property except for
A couple.
a couple, yeah.
Yeah.
And banks, they like to see nursing income. They like to see CRNA income. It makes them feel a lot safer about their investment because they're, I mean, they're taking a risk on us, but they like to see that income. And if we had quit making as much money as we're making combined, everybody together, they, who knows, they maybe they would have been like, hey, we can't take this risk on you guys. Whereas they've been very creative with us so far.
Yeah, and especially early on before we had the background and the history in the space that we're working in now with the mobile home parks and just real estate in general, I think they would have been a little more hesitant. So I have had somewhat of a position change.
Feel free
I'm
to
not.
make fun of him in the comments.
Yeah. I will not be coordinating strokes, but I will be navigating them. Well, I don't know. So it's kind of this interesting thing, and we'll get back to why that's funny. But so today's Tuesday, no Monday. Today's Monday, and I was training today for this new position that I will be interviewing for on Thursday. So it's kind of like this weird gray area with my boss where I'm being trained for this position, but I still have to interview for it. And I'm like, so are we pretty sure about this? And she's like, oh yeah, no, it's gonna be good. You just gotta do this interview and blah blah blah. And I'm kind of like, all right. I mean, I haven't given up my per diem job, so it's not like I'm like closing one door to pursue this thing. Like I'm totally fine either way, but it's just kind of this weird um
And didn't
limbo.
this kind of didn't this kind of stem because they didn't have as many shifts as you originally had thought?
Yeah, so they staffed up and there weren't that many per diem shifts. And so my boss asked me if I'd be interested in being the I thought she had said stroke coordinator, but it turns out she said stroke navigator. I don't know what that means, but
I've never,
I'm the stroke tour guide. So I
I've
just
I don't know. I'm just trying to imagine like an equivalent position, like an epic super user. Is that like an epic user?
so it's like, okay, you know when you go to Chick-fil-A and like there's a person standing outside the window, but there's the person like the people inside the window are doing all the work and the person outside the window is just handing you your bag that they've all prepared that they could
Yes,
have just handed to you themselves.
that's you.
I think that's gonna be me. I'm just
So
gonna be there.
you're the my pleasure person.
Oh, it's yes. It is
Yeah,
all my pleasure. Yes.
stroke navigating for your pleasure.
Oh man.
Sometimes
So
sense of humor is childish. Sometimes.
oh, very much so. But so I don't know what it means. So by the next roundtable, hopefully I'll know A, whether or not I got the job, and B, B, what exactly I'm. So I have a pretty good idea of what I'm supposed to be doing, but I don't know. She kept talking about like all these meetings that I'm going to have to lead in front of like intensivists and other people in the hospital. I was like, wait, what?
Wait, this is not what I signed up for.
Yeah, I was
So
like, hold
basically,
up.
so by our next roundtable, you'll know what a stroke is and how to treat it,
Exactly. That's right. Yeah.
or oh,
Uh,
sorry, how to navigate it.
How to navigate it. Yeah. So that'll be interesting. It'll be a different role. Um, a lot closer to administration than I've ever wanted to be, but
Flexible hours, right? Except for these meetings.
flexible hours. Yeah, there's like some meetings that are obviously not flexible, but like on Wednesday, I'm going to something at UC Davis.
That sounds intense. And you got to lead this meeting.
No, no, no. I'm just participating as a navigator.
You're just gonna navigate this meeting.
Actually, I'll be the passenger, so I will be able to navigate us to the meeting and back home from it as my first one of my first orders. So we'll see. So little things shaking up in the nursing world for both of us. Jen is continuing to catheterize in the laboratory of catheters, and I'm sure most people were like, "Oh, roundtable, where's Jen? Sorry, she's not here today. You just stuck with us." But
Yeah.
I know I feel like the feedback has primarily been more Jen, and so we decided to give you the two of us instead.
Yeah. Everybody loves it when Jennifer's on here, so we decided to not have her on here today.
So I guess the other thing going on, so that's work. Were you gonna say something before we hop into Sadowit?
Nope.
Sachet, I should say, for obscurity. Yeah, we got a fourplex in Wisconsin that has been, I don't know, it's been a love-hate relationship with this fourplex. And we refinanced it back in March, I think. And full transparency, I think at the time we had talked about selling it. I know Josh was definitely leaning towards selling it. Um, and I was actually open to selling it at the time, but Jen and I were kind of in a we were getting ready to move up north, and with like the move, there were going to be a bunch of expenses, and with us having been out of nursing for a while and our pay having decreased, like we were like we could use this money sooner rather than later, and so that's why we kind of pursued the refinance thing. In addition to the fact that it's a property on a lake, so there's some motivation to keep it just because there's a potential for the value going up more than other places in northern Wisconsin. But yeah, now we're looking at it and it's part of this HOA, and I think this goes back to our lack of due diligence over the years.
It's not an HOA per se, right? What is the term they use? It's a
It's like a condo associate. I don't know.
yeah, it's some other term that confused us when we were buying this property, and we're like,
Well, and there I think there was like somewhat of a misrepresentation from the selling agent.
this is true.
So
Yeah.
there's that. But again, like I think there's always that, like, I don't know. It's kind of tough. I don't want to say that we don't. I think we run
So I
things.
think I was gonna say I think we make fun of ourselves a lot. Like this is not to say that we didn't do our own due diligence. We were very aware of the situation we were entering. We just we just blew it off because we knew we could handle it.
Yeah, I think there is some degree of that. Like there's a lot of things that we see, and a lot of other people would say, "Oh, that's not worth doing it," and we just have this idea like, "Oh, well, we'll just figure it out," and we usually
And we
do,
have.
and we have, and it's worked out. And there's been some headaches, and maybe I don't know. I don't know. I can't say that
But would
with
you do
any of
anything
our.
differently though?
Well, that's
Like
what I
I
was gonna
don't.
say. I can't say that with any of these properties where so Lincoln, the one where we skipped the inspection, I definitely would have gone back and done the inspection. Um, but then I still think I would have bought the house. I would have just addressed that up front so it didn't come up as we were getting ready to like sell the place.
I mean, and this one, like, even though like we're getting ready to sell it because it's been a headache, like we're still about to make. Well, I mean, we haven't sold it yet, so who knows? But like, we're on trajectory to make about 100 grand.
And we just asked our real estate agent
My
slash
mom.
slash Josh's mom. I was trying to make us sound more official, but yeah, it's your mom. uh, so, anyways, our our realtor,
Our realtor.
we asked her for a CMA, but I don't. I think it's just more of a formality because we just had it appraised for this refinance, so we know exactly what it's worth. But it's just like I get, but it's all that's the appraised value. But then it's like, well, okay, well, what will people pay for it? So
That's the actual value, is what somebody else will pay for it.
yeah, exactly. So that might be a sell, and then that money would go towards new mobile homes, which I think in the long run will benefit us significantly more. But then we won't get to go to the annual meetings,
We only
and
went to one,
we went
and it
to
was a
one,
waste of time.
and it was incredible waste of time. It's funny because there's 12 people, or there's 12 votes in this condo association, and we have four of them because we own the fourplex. But we also pay four times the amount that everybody else pays. So all these other people are like, "Should we get more wood?" And it's like $600, $50 a piece, and everybody's like, "Yeah." Meanwhile, none of our tenants use the wood, and we have to pay for like 2/3 or a third of it. So it's like that just kind of tells you why we're getting fed up with this property.
And there's like one, is it one or two people that keep making insurance claims on the entire association, and it drives and we're paying four times what everybody else is paying, and the insurance is like just substantially higher than any of our other properties.
When they're getting ready to do a internet upgrade for like $5,000 or $6,000. I've never seen any piece of internet equipment that costs $5,000 or $6,000. So I have no idea what they're doing. But they just all voted for it, and it's like, oh, here comes another 466 per unit, so times four for us. So that's going to be like another like $1,800.
I mean, I don't know this for sure, but it's just a bunch of people that wanted to own a property and thought the idea of an HOA was a good idea. And they're trying to run a business, but really it's just a bunch of people that live there.
Yeah, and then like the treasurer will ask for receipts and documentation of spending, and it'll be like an upside down picture of a piece of paper on her desk. I'm like, okay, I'll send the check.
In pencil, probably.
Yeah, it's just crazy. I don't know. But there was like a 92-page condo association document that we like skimmed through. So I
Yeah,
mean,
but I'm not
I'm
reading
sure,
92 pages.
yeah, somebody should have, but it wasn't going to be either one of us.
This is before Jennifer came in. She probably wouldn't have read it either, though.
She wouldn't have read it. But we got a new guy working for us. Oh, that's something that's cool that's been going on. So we hired Brandon. I think we could
You're
say his
deciding
name. I
his
was
name
like,
or not.
well, I was like, is it okay to say his name? But yeah, that doesn't really narrows it down to like millions of people. So, but it has been awesome. He's a friend of mine, and
Well, now
he
everybody knows who it is.
that still only narrows it down to a few people. There were definitely some. I didn't have any doubts in terms of like his loyalty, but just it's a lot, and kind of not knowing how he would adapt, not really having a background in property management, but he's been doing customer service for a lot of years, and it's really cool to see how he's stepped in and just kind of taken over, and it's taken so much off our plate, which has been amazing. And I mean, obviously, we're still involved and we're still in the day to day as he's learning things, but I will say, and this kind of could segue into like your family signing a lease, but doing business with family and friends obviously tricky. Just like we have an operating agreement, we have work description and a role all laid out for him, so the expectations are very clear for what he's supposed to do, similar to any other employee we would have hired. The difference being, like, this guy, one of the things I love the best most about him, and I've always appreciated about him, is how loyal he is. And now seeing that loyalty in like the form of him just really wanting to do well for us has just been awesome. And like the dude's just stepped up, and so very excited. Can't say enough good things about him. And it's definitely financially set us back somewhat, but I mean, long term, it's just gonna be awesome. It's gonna be great.
Yeah. And now we can buy more properties, whereas it would have been pretty tough to do that before this.
Yeah. So
Yeah. And where we're preaching not to be loyal to your employers, it's good to have loyal employees.
well, it's different though, because like, you know, he left a company.
and for something better. Well, and I mean, you kind of speak on that a little bit too, because it sets us back, but it's also extremely rewarding to be able to improve his life as well.
Oh yeah, like the other day he was well, oh actually, wait a second. He was on the clock. But no, he's not really on the clock. He's supposed to be working like 8 hours a day essentially, but like there's obviously flexibility in that. But I was talking to him and it was like 2 o'clock, and his kids go to school right down the street from their house, and he was walking to pick up his daughter. And I was just like, that's pretty cool. Like, you know, to be able to have been a part of something that got him there and whatever. And now he's going to get us farther ahead, so it all like kind of works out. But I think being loyal to companies that treat you right is totally fine. Being loyal to these big hospitals and corporations that don't really care about you and will cut you at the drop of a hat, like Josh has
Yeah.
experienced.
Clearly, I'm just a number. I might still be a little bit salty, but I've
You'll
provided
find you'll find
a
out
mi-
January 26th, 2025.
January
How
26th.
salty. January 26th, 2025.
Wait a second.
Did you say 2026?
I think no. It's January 20. Let's say January 25 because that's my last day.
So 25 125 25.
Yeah. Oh,
Okay.
you're gonna get the sauce. No, the
Oh,
tea. You're gonna get the tea.
what is the T? The
That's what
youths?
that's what the youth are saying.
I will never understand this new generation.
Oh my goodness. No, I hang out with one of my good friends, Oliver. I hang out with him. He's only 10 years younger than me, and the way he communicates is like a different
Sus.
language.
Yeah.
Yeah.
Yeah. I will never.
I
I mean,
try
I,
to
I'm
say stuff, but no, I'm too old for that.
yeah. I'm sure we sound really dumb to every generation that came before us. So I guess it's all just part of the process.
This is true. Yeah, I saw a video on social um making fun of millennials because we don't know how to respond to a text without adding LOL. And it kind of hit me because that is 100% true. And I'm sure people that are 15, 20 years older than me are like, what the heck is like LOL? That's not even funny.
It's just become like this thing that you add. I don't know. I think part of it is texting. I'm not going to get into texting right now. Should your family sign a lease? I say yes. Josh, what do you say?
So we were talking about this a little bit before, and we thought, oh, that's a good idea to bring this up. I think it's a good idea, but I would have a really hard time like bringing up that in conversation, like, oh, hey, like you should sign this lease because I don't trust you to do what you are supposed to do. Colin, what do you think?
But okay, but here, let's put it this way.
All right.
You have this family member that's moving into your house,
Okay.
and you don't trust them to do what they're supposed to do. Should you have them sign a lease that like outlines exactly what your expectations are for them to do, or should you just let them move into your house knowing that they probably won't live up to your expectations, and just basically bite your tongue for the next however long they live with you?
Probably just avoid eye contact every time you pass. So,
Yeah. I mean,
it,
so
it makes sense.
I don't know. I think you have to treat everything. I think the clearer expectations are, the better things turn out.
Well, but also like my thought is if your family member's probably not going to just automatically do certain things that are customary for guests to do, then what would a lease change? Probably not a lot. Even if they signed saying, "Yes, I understand this is my responsibility." If that wasn't already in their expectations on both sides, do you think a lease is going to change a lot?
I think that when I kicked them out, it would change a lot,
When
because
you
that's
brought
what
the roommate agreement,
when I
Sheldon
evict
Cooper.
them, because that's the thing. That's what I would do. At a certain point, I would evict them to save the relationship. I would kick them out, and I would say, "This is not an emotional thing. This is not because I don't love you. This is because you violated your lease, and you gotta go."
It's not me, it's you.
Yeah, exactly. I don't know. I mean, I talk a big game. Would I actually do it? Probably.
Absolutely. Still, probably you would not. You
I
would
don't
not.
know.
Jennifer, however, 100% would.
I think she would. Oh, she would, and I think I would too, because I've
I don't think I
seen.
would. I think I would just buy a new house for myself to go move into.
Yeah, I don't know. I think, like, I think, thinking about it, I would maybe not do it, but then when I think rationally about it, I think that there's a lot better chance of your relationship being saved by just being very clear with expectations and very cut and dry with the results of those expectations, than to leave things up to interpretation. Because again, said it so many times on here, 90% of our issues have been communication and not being clear about expectations. So I think, especially with family, I think that's the thing. People are always like, "Oh, well, it's family, it's a friend, it's this and that." And to me, I think you even more, because if I'm hiring some random person off the street or just whatever, like we put up an ad and somebody responds to it, and then all of a sudden they're not living up to my expectations and we have to fire them, it's like, not to say no sweat off my back, but it's like, okay, I'm never going to see you again. I never saw you before. I don't even know who you are. But if this is a close friend or a family member, and now it's like you're in this awkward situation where you have to evict them or fire them or whatever, you know, if they basically know it's their fault.
So if you had a family member that was moving into a separate property, not you, they're not moving in with you, they're moving to a separate property. I feel like a lease would be reasonable and expected almost.
Oh
But
yeah,
so
for sure.
you're saying if they move in with you, say to a spare bedroom or to a basement or something,
Lease
or to an
agreement.
attic, lease agreement.
Camping in the backyard, lease agreement. Like, don't leave the.
Borrowing the car on a Sunday to go golf in,
Yeah.
lease agreement.
Well, and I will say, like, we stayed, when we did that travel assignment in Wisconsin, we stayed with your parents, and we had, I think our daughter was 3 to 9 months old during the time we were there, and there were times when I felt like we were pretty messy, and I was a little more careless than I probably would have been in somebody else's house. Would that have changed with the lease agreement? I don't know, but it would have been very clear what the expectations were. And then it wouldn't have put, I felt like at times your mom was probably in an awkward situation where she was probably just like, "Hey, I wish these guys would clean up the dining room table instead of having all their like workout on the table." But we were just kind of like a little loose with it here and there. Whereas I think I would have been more.
And then there's like a physical document that you can print out and like tape to their door every time you feel like they're not standing up to their
Just
side of the
every
function.
time they screw up, you just slide a copy of it under the door.
Don't even have to say anything.
Good
Under
morning.
the door.
And you just throw it in their face. Love you. So
Oh,
I don't know. I say yes. Let us know what you think. And the last thing we're going to talk about that we know nothing about is the election.
right? We're not trying to get banned on social media and on YouTube, but we're going to talk all about the pros and the cons of elections in general. No, I'm just kidding. I don't know a whole lot, to be honest. I mean, I know who I'm voting for different reasons, but I don't know. I'm not sure if it affects either way. I don't know. Like the amount of power that a president has to actually change things is not as much as I thought probably 4 years ago
Is that because
or
our
or
current
8 years
president
ago.
just disappeared and nothing changed?
This could be. This could be.
Yeah.
That could
Yeah, I
be
don't
part of
know.
it.
I think it's an interesting time because I think whichever way this particular election goes, there's going to be a lot of people that are upset on either side of it, which is
Yeah.
why I'm very glad to not be living in a city right now as we approach November. Oh
Hmm.
man, it's like a month away. That's crazy. So I don't know. You know, I don't think it should be. I think that's like what's frustrating. It's like you see 4 years of somebody and they're doing all this stuff to undo what the last person did, and then the next person comes in vowing to change everything that that person did, and it just seems like nothing gets accomplished. So sometimes that's good, sometimes that's bad, but overall, it doesn't seem like the overall best interests of the country are in mind.
I know some of the biggest talking points that I've heard from this election are the tax on unrealized capital gains, which to me does not make sense. I don't understand that in the slightest.
That one's kind of scary.
Right. Yeah, because you can own this asset that's not producing any money. Right. Like, I mean, maybe this is me being ignorant, like not fully understanding it, but you can own a block of gold, and in 20 years, that gold goes from being worth, I don't know how much gold is worth, but let's say it goes from being worth $500 to being worth $1,000. You have to now pay tax on that additional $500, even though like it didn't do anything for you. You didn't actually see that money yet. You just have the gold. I don't know.
One a guy I work with was explaining it to me, and like the idea, I guess, was that this is supposed to. It was like something like the way people like Elon Musk and Bezos will not sell stocks, but then take out loans against those stocks, and they're
And
essentially getting all
that's not taxed, so that
right.
they're
So
gaming
they're
the
getting
system
all this
almost.
yeah, and they're getting all this tax-free money. And I can kind of understand, that side of things and wanting to make those people pay a little something or, whatever. But then it trickles down to people like us and what we're doing and that's where I'm like, okay, but yeah, how does this affect us? Because at the end of the day, like, okay, you tax Elon Musk, like what's that going to change in his day-to-day life?
Right.
He's
Well, and I think that particular proposal was for only people with a net worth of 100 million or assets worth 100 million or over. So that's us,
tax,
obviously. So
yeah, tax us all, tax all of us.
yeah, but I mean, I always think that people with a net worth of 100 million or more, they have the best lawyers on standby at any given moment. Do you not think that they're going to find a way around this? And then it will trickle down to us because they're not going to get the money that they thought they'd get. I
Yeah,
don't know.
I don't know. I don't know enough about it, but just on a surface level, hearing it scares me because a lot of our gains are unrealized. And I'm like, we're not making money on
One
these things.
one
Like,
day,
yeah, like we're kind of kicking the can down the road to when we can actually generate some, like, take some cash flow instead of just putting it all back into the business. But even like, I don't, how would this affect 1031 exchanges? Would it? Would it not? I don't know.
but I feel like they tried to get rid of that in the last few years, and I feel like they would try again. Every once in a while, they try to get rid of it, but I don't know. There's too many real estate investors that realize that would be a bad idea because of the trickle down effects.
Who is they?
They is that imaginary figure that has been the president the last 4 years.
We're gonna say the last 100 years, just so we're just hoping for the best with this coming election. And
Bottom line is, I'm gonna go vote, and whoever becomes president, I'm gonna continue what I'm doing, bettering myself, my future, my family, and everybody who works for us.
yeah, and same. I'm gonna go vote, and depending on what happens, I might move to Bali. So you know,
I mean, whoever wins, that sounds like a good idea.
dude, our friend is in Bali, and she just opened a shout out to Angela Rummins and everything she's doing since we met her. She's just always super business savvy, and she just opened a vegan, hear me out, vegan cinnamon roll bar in Bali. Didn't know there'd be a market for that there, but there's a lot of there's a lot of Anglos coming from other countries apparently. But yeah, it's cool and it looks amazing. And speaking of employing people, just in the little clips I saw on her Instagram, she's got, local people working for her, which like boom, she's moved there and now she's stimulating their economy and also doing well for herself. So that's kind of the best it can get. So
Don't make fun of me, but Bali's in India, right?
okay, and with that, thank you for joining.
The
in,
reason I
in
say that is that was more.
Indonesia,
Oh, okay, all right.
same
Is
thing
it
though.
actually?
Yeah, India and Indonesia are basically the same thing.
I'm thinking Bollywood. That's India.
Oh my goodness.
Okay, talk to me about American geography. I got you. Like anything. Ask me
Well,
capitals. Ask me like highways, whatever. Don't ask me highways. I used
yeah,
to be really good at this stuff, and then I stopped learning about. I stopped quizzing myself, and now I quiz myself about business,
yeah. Well,
and I'm not good at either now.
I was gonna say that is the one thing I'm excited about, kind of with this whole stroke navigator, is actually being specialized in one subject because I always feel I don't know. Yeah, just
Nurses
very
need to be
much.
good at everything.
Well, just being in an ER, like just the master of none. It's kind of exciting to actually be know something really well and be really good at it and like be I'm not gonna say expert. I'm definitely not gonna say expert, but at least somebody that could like navigate you through it
So if somebody comes into the ER completely limp on one side, now you'll know what to do.
for the first time in my 14-year career. Prior to this, I wouldn't know. I'd probably work them up for like gallstones or something.
You look like you need a wheelchair.
You need Ativan.
Don't mean to be making fun of people having strokes. That's not funny. But
Yeah,
now Colin will know
I'm
exactly what to
passionate.
do.
I'm passionate about this. Check us out, Investing RN Pod.
Invest with us. We onboarded a new portal to where we are accepting funds. DM me or the pod, and we'll get back to you. If you know somebody that would make a good guest on here, let us know. We'll have them on.
We are excited for all recommendations.